Now, the good thing about buying into some of these ultra high yielding ETFs across the market these days, I'm not talking 5%, 10%, but 15, 20, 30% yielding ETFs, is because basically from day one, you can earn a boatload of cash flow and not have to wait years and years until your yield on cost gets much higher to earn a ton of income every single month or quarter, etc. But the problem that a lot of you guys already know is that not all of these ultra high yielding ETFs are created equal. Some of them decay like crazy over time. Some of them even lose investors' money over time. But some of them do the exact opposite. So in this video, what we're going to be doing is backtesting some of the most popular ultra high yielding ETFs, talk about what they are, how they work, and of course, how much they've either not returned or returned investors since inception so far. So if you're an investor that loves cash flow and loves high amounts of income, then make sure to stick around, drop a like down below, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first ultra high yielding ETF that I started buying last year and that definitely has raised my income substantially with a small amount of money invested is SPYT, or the Defiance S&P 500 Income Target ETF. Now this ETF has a target distribution rate of 20%, which means theoretically speaking, for every $100 that you invest into SPYT, you're going to be receiving around $20 per year in income. Now, of course, this is not guaranteed. Anything can change when it comes to anything in the markets. But at least that's what this ETF is aiming to achieve. It says right here, aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. Now the strategy is sort of interesting, sort of complicated, but listen in. SPYT is an actively managed exchange traded fund dedicated to generating current income. Our strategy revolves around holding shares of ETFs to track the S&P 500 performance and engaging in the selling of daily credit call spreads on the index. Now, when this is done right, it can offer a massive amount of income generation. It says right here, this ETF's investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads, the primary driver of the fund's yield. Now, how they do this is they sell at the money or near the money call spreads to retain some upside growth potential and to aim for that target annual income of 20% per year. So this ETF offering a 20% yield and around 30 to 34 cents per share per month as far as income goes for an ETF that costs around $19 per share seems like a great investment opportunity. But of course, it's only been trading for a relatively short time frame, so we don't exactly know what's going to happen if we see a sustained bear market, etc. But all we do know is that if we backtest SPYT over the last 0.83 years and take a $10,000 investment with dividends being reinvested, that 10K would turn into $11,385, or a total return around 13.8%, or an annualized gain of around 16-17%. Not bad whatsoever, especially for those investors out there like myself that are trying to urgently raise their dividend income on a consistent basis, but doing so somewhat safely. Another popular ultra high yielding ETF that we definitely need to backtest and see exactly what its returned investors, all things considered, is XDTE, or the S&P 500 one day till expiration covered call strategy ETF, which is an ETF that utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the S&P 500 index. Now it says right here, the round till S&P 500 one day till expiration covered call strategy ETF, or XDTE, is the first ETF to utilize 0 days to expiry, or ODTE, options on the S&P 500. Now, XDTE seeks to provide over an exposure to the S&P 500 and generates income each morning by selling out the money 0 days till expiration calls in the index. XDTE is an actively managed ETF. Now, this ETF has a distribution rate of 34.96%. So again, relative to whatever amount you invest into this one, you're talking a massive amount of distributions, which in this case are paid out weekly. Now, the distribution history for XDTE is anywhere from 33 cents paid out weekly to 60 cents, 64 cents, all the way as low as 15 cents. They're sort of all over the place, more or less. But either way, even on the low end of things, this ETF is offering a massive potential for income from day one. But the real question is, what does this ETF actually return investors since inception? The last 0.83 years, we're talking around 17% or around 21%, with dividends being reinvested along the way. So again, not necessarily the craziest return that we've ever seen in the market, but for investors that are income hungry and want something to pay them weekly, this ETF so far has done pretty good. Now the next one to backtest is XTTE's brother or sister QDTE, which is the same thing more or less. The only difference is instead of the S&P 500, this ETF utilizes the round till innovation 0 days till expiration cover call strategy. The only difference is that this one utilizes the innovation 100. Now with almost a 39% distribution rate, this ETF also has paid out a massive amount of income to investors since its inception, which keep in mind it's only been trading for a short time frame. And even though these strategies can be risky during certain market conditions, so far at least QDTE has offered around a 17 to 21% return depending on how you look at it. And of course, this is once again with dividends being reinvested. So once again, for income hungry investors that want exposure to the Innovation 100 index, this ETF so far has done pretty well. Now, another one of my favorite ultra high yielders that's offering around a 25% distribution rate is FEPI, or the Rexfang Innovation Equity Premium Income ETF, an ETF that's been trading for a while now, over a year, and that basically buys into big tech names, writes covered calls on those names, and then you guessed it, earns a ton of income for doing so. Now, how much income are we talking per share per month? We're talking anywhere up to $1.20 over the last 12 or so months. Now, even on the lower end of things, we're looking at a 20% distribution rate, which again is massive compared to even some of the highest yielding ETFs across the markets. But with all that income, a lot of investors, including myself, are afraid of NAV decay, are afraid of a negative total return, which is definitely justified because a lot of ETFs that do offer a 20, 30, 40% return definitely have those tendencies. But when it comes to FEPI with $10,000 invested and with dividends being reinvested along the way, we're talking 27% total return, or an average around 22% per year. Now, FEPI's been trading for around 1.23 years, so the longer that this thing trades and the more market conditions that it sustains, I think this one could be a massive winner, which is why I definitely own some shares of it across my personal portfolio. Now, last but not least, I wanted to backtest one of the most popular YMAX names, YMAX, the YMAX Universe Funds of Option Income ETFs. Now, this, of course, is YMAX Fund of Funds, quote unquote, meaning that it will primarily invest in YMAX ETFs. The funds portfolio will be reallocated on a monthly basis so that each YMAX ETF held in the funds portfolio, including any new eligible ones, will be equally weighted. Now, the distribution rate for this one is around 54%. So again, we're talking ultra high yielding here. Theoretically speaking, you can make back your money in 2 years. Now, again, will that happen? Is it guaranteed? Of course not. But looking at how much this ETF has been paying, this is on a weekly basis, 18 cents, 24 cents, 13 cents, 12 cents. This ETF so far is living up to the YMAX names and offering a boatload of yield. But as always, what does yield matter if the total return is negative? If investors are going to lose money? Well, in this case, for the final ETF that we're going to go through, it also hasn't. Around the last year or so now, this ETF has offered investors a total return of around 29% or an annualized gain of around 30%. So even though some of the names in this ETF are sort of known as yield traps, so far this thing has not been a yield trap whatsoever, and it's offered a larger total return than a lot of other stocks and ETFs during the same exact time frame. So there we have it. Those are 5 different ultra high yielding ETFs that offer anywhere from 20 to 30 to 50% yield per year. Now, even though every single one of the ETFs we went through offers a ton of income potential from day one, and all offer, at least so far, a positive total return, definitely does not mean that every single ultra high yielding or even high yielding ETF or stock can do so. That's why it's very important to look into the strategy of whatever ETF you're buying into and look at the performance based on multiple different time frames, and then based upon your personal risk tolerance, invest in whatever the heck you want to. But going off of the 5 ETFs that we talked about in today's video, if you could only buy one for whatever reason, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.